afternoon. This is Chris Brecher with a Simpler Stocks free video for June 14th, 2016. So you can see it's about 3:43, about 17 minutes before the close. If this sounds echoey, I'm broadcasting from the home office today in Austin, not in South Florida. Just to let you know what happened today is after a lot of geopolitical events I don't want to even get into over the weekend, and then the fears of the Brexit next week, we saw just the SPX open down and stay down. Now, the whole idea about this is, number one, their fears, like I said, about the Brexit. The second thing in here, after every bounce that we've tried to get in here on this side, the problem is there's such bad divergences with the DJ China down about 3%, the German market about down 2%, and you realize when you really look at this, down 16.25 sounds horrible. It's only down 0.73%. I hope you can see that in there. Our markets have been so muted compared to other markets, and I'm going to be showing you that on some other charts in a minute here. Right now we have the ES is down 16.25. They've had a slow sell-off all day. To give you, for instance, here, and I'll show you what I mean in here, on Friday we sold off because of the SPX going to 2100 like I had predicted. The whole idea in this, and I'll show you this real quick, is that we rallied right on the close on Friday because, number one, like I had put in the videos and on the Simpler Stocks chat and on the message board, the forum, I had put that it was very likely the SPX was going to sell off to 2100 because that's where a bunch of open interest. Now what happens in this case, though, and let me link this so you can see it, then what happened is the SPX just on the close on Friday rallied right here. Hard to see, but it rallied from 2090 right there, 2089 right to 2098. Now that's because of the pull on Friday of the SPX 2100. A lot of times when you see that, once those options expire, it just resumes the down the next day, which is exactly what you got. Now what we got in here on top of this was a lot of divergences like the transports. Transports, obviously people are worried about that with any kind of geopolitical events. So the airlines near their low for the year pulled down the transports. And the problem with the transports is this. If you go and link this in here, there were a lot of people that saw this on the SPX. I'm actually going to unlink it. I'm going to show you what I mean in here. We're going to take off the futures. And on the left is the SPX. We're going to put this on a weekly chart. And on the right is the Dow Jones Transports. I'm going to put it in a weekly chart. What you're going to see in here, and a lot of people ask, what do I mean by divergence? What do I mean by point of no return? This is a divergence. SPX near an all-time high. This is the transports down about 1,500 from their all-time high. That's called a Dow theory sell signal. The key in here, though, is this. A lot of people thought this was a little Stewie pattern in here. We call it Stewie on the Simpler Stocks premium chat because when I highlight it, it looks like Stewie. But the whole idea is it's really inverse head and shoulders. There were a ton of traders that figured that this would finally kick in gear here as an inverse head and shoulders and go up, and then everybody would be happy. The problem is it's selling off today down another 86, even when the SPX almost got done change today. In fact, it got barely above. This stayed down 50 points. Now people are worried that instead of this being a head and shoulders bottom, that it's just going to roll over down here, and then that's what I mean by point of no return. That when it sells off so much that it can't kick back in to fill this divergence, and what happens then is the Dow theory sell signal is even more in force. And that's why today, look at this on a 15-minute chart. You can see it clear as day. Look at the transports on the right and look at the SPX on the left. Notice in here what happened in here. We had the opportunity to rally right there. But the problem is, look at the transports. Even in this little rally, they recouped everything right there. Recouped everything from the opening. Notice the transport didn't come close. And that's why then the SPX sold off in earnest to follow the transports. And that's exactly where we are right now, with actually the ES is down on their low for the day, down 16.25. Now another thing I want to show you in here that I show a lot of times on the premium chat Let me get it up here to show you. So I show the German DAX. I use TradingView. Because see, the problem is, this is Thinkorswim has DE Dow, which is the German DAX, and some iteration they put in there that looks a little, doesn't work that well. And they have the DJ China, which is the Chinese index. The problem with both these indexes, as you could see, they're not the easiest thing to chart in the world. They just don't look the same. They have all these gaps. Much better to go in here. Let me get it in front of me so you can see what I'm talking about. And go in here with TradingView and look at the Nikkei and look at the DAX. Much better charts in here. Now what you're going to see in here is look on how this has broken this line and this has broken this line. Now the reason I'm mentioning this is if you zoom out on these, you're going to see how much they've underperformed the S&P. I mean, they look very similar. The key is this. The German DAX is underneath where the 2040 level in the SPX, when everybody thought we had a head and shoulders, and we were going to go nuts on the downside, and then we went majestically up. This now is under it. Same with the Nikkei on the left. Now, the thing about this is, if you then put up here either one, so on this, I'm going to go in here, and I'm going to put up here the SPX 500. That's what I want you to see in there. We're going to now take this off. And TradingView is great for foreign markets. But the whole idea, look how high this is. Look at the 200-day. Look how this is plummeted under it. And look how far this is above it. Now, that doesn't mean this divergence can't go on for a while. But there's a certain point, like if the German DAX gets near its February low, when you realize this is 200, 300 points above it, something's got to give. Now, the other thing you have to realize is in Germany, number one, they have more QE, a lot more active QE. So does the Nikkei. The other thing is the Nikkei and the DAX, their respective countries, have zero interest rates. And this is the best they can do. That's a very dangerous situation that the government this time isn't able to stem the tide of a sell-off. Makes you wonder if ours is going to do the same thing in the future. So that's some of the stuff we're going to be watching, and we're going to be discussing on the premium side in the video. Which brings me to the next thing. A lot of people ask, what is Simpler Stocks? Let you know, for $7 you get a 30-day trial. You get our chat room. We have a live chat room from 9 to 10 in the morning, which we've had some great calls. Even today, we were talking about shorting Special K on the opening. And if you want to sign up for the $7 trial, it's probably worth, a year the subscription to just go over what we talked about the first 10 minutes of the chat today, which already made a lot of money for a lot of people. We should go over the theory about takeover stocks. You have the premium video, which in there is a little more in depth than what you're hearing now. You have email alerts. I've actually already put some out today. Usually after the close, I show a bunch of index and futures charts, a lot of stock trades and chart ideas. Luckily, I've been showing more shorts and longs until otherwise noticed. A lot of time with the unusual option activity, a lot of this is during earnings season, or if I see, charts set up that have unusual option activity. Also takeover ideas. The problem is that I've seen in this type of market, very rare to have a takeover when companies are worried about Brexit next week. Now, today there was one with LinkedIn, and ask anybody on Simpler Stocks of how many weeks I've been harping that LinkedIn was a takeover candidate. Do not be short a takeover candidate on a Friday. And it saved a lot of people's behinds this weekend. I got all these emails about I was shorted, I hated the market, but I listened to you and covered my LinkedIn, and the stock's up 63 today on Microsoft buying it out. Doesn't mean you have to make a fortune taking a shot and saying, oh, I should have been long 100 lot of the 120 calls on LinkedIn, but it might save you from busting out in this business. And, I'm here to help avoid disasters and to make you money consistently. So those are a couple of the things you get in here. Other thing you should know we have in here is this. Great learning tool. We have the forum where we can exchange ideas back and forth in more like a message board kind of format. Then we have the meetup in the Learning Center. This is an amazing thing in here. Basically, I go in here, and I always say I'm going to take 15 minutes. It ends up being an hour. And the last couple have actually been the last hour of trading, not only going over the MACD and trend lines, but going over how then I would structure a trade. The thing is, these are all about an hour, and each one comes free with your subscription. Can't download it. You have to have a subscription. Look how many of these hour-long things, bull and bear flags, moving averages, ATR trailing stop using the MACD, these are all part of your subscription. Most places charge probably $99 per video, and you get them just thrown in. I'm very proud of those in there. Those go with the Learning Center. Also in the Learning Center, we have a lot of fun. We have like quizzes and we have workbooks. They've been very interactive and they've really been a big hit. So I hope you can take us up on our offer, the $7 30-day trial. We're actually soon going to stop the trial. So if you get a chance, I would sign up for it now. We've had thousands of people actually sign up, and our retention has been one of the highest in the industry. So have a great day. Put on your seatbelts because this is a pretty wild market this week. Have a great day.